Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, which is also going to be a new month, which is the month of November. So the month of October has fulfilled its market movements. So we are starting off from the dollar index, and this is the monthly time frame. What we can see in the monthly time frame here in the dollar index is how price traded into the monthly demand zone we identify here, taking sell side liquidity, and we saw how price returned respecting this level. So I told us to anticipate the possibility to see bullish movements aiming for this buy side liquidity, and in extension we have this monthly bearish breaker. If price doesn't respect the monthly bearish breaker to give us the bearish continuation to the downside, then we could see price get attracted into this monthly bearish fair value gap. So what we can see thus far is the fulfillment of market movement to the upside here in the dollar index. Price mitigated the monthly bullish fair value gap the second time, bullish rejection. Anticipation was the bullish movement to aim for buy side liquidity into this breaker level to anticipate the possibility of downward movement of price to the downside. So clearly we can see the fulfillment of that movement, though price have not taken the buy side liquidity. So we'll be looking forward to see that in the new month, which is the month of November that we're already in, that price may give us a bullish movement to seek buy side liquidity into the monthly bearish breaker level. And then we could see the possibility that may happen here if price is going to journey more further into the monthly bearish fair value gap, or we could see bearish possibility to the downside. So let's look at the weekly time frame here in the dollar index. So what we can see here in the weekly time frame is in the monthly zone, which is the monthly bullish zone, we can see clearly that we had price return into that. In the weekly time frame, we have a weekly bullish fair value gap. Price mitigated that the first time, gave us bullish movement. I told us to anticipate to see price aim for the buy side liquidity resting here, equal highs, and then we saw price again return to that same monthly bullish zone. In confluence again is the weekly bullish fair value gap. So price mitigated that a second time, taking out sell side liquidity, and we saw bullish rejection. And then I told us to begin to frame bullish possibility to the upside in a long-term perspective, looking forward to see the possibility that price would aim for this buy side liquidity resting here, since what we can see is that price took out sell side liquidity. What we can see in dollar index, we have strong bearish volume, and the bearish volume returned into a monthly bullish zone, hence why we anticipated bullish reaction. So if you can remember from the monthly time frame, this is the monthly bearish breaker level. So we can see here in the weekly time frame, we have an unmitigated rejection block here. This is the monthly bearish fair value gap zone. So we could see further bullish possibility to the upside, because what we can see is that last week closed strongly bullish. Now we can see that when we had this bullish movement and the bearish movement occurred, I told us to anticipate for the bullish movement and then anticipate a pullback reaction at the weekly bullish order block. We anticipated the possibility that price was going to hold from the weekly bullish order block, and we could see further bullish movement of price to the upside. And I told us it is when price violates this that we can start looking at bearish possibility. But what we can clearly see is that price held itself from the sponsorship block and continued bullish. So now for the coming week, we can see price gave us a sell movement here before further bullish movement. So creating a new sponsorship block here, because the institution sold before taking price higher, meaning they sold to discount level so that they could buy into premium level. So what we are going to anticipate is a possibility that either we see price pulls back and react from this reclaim level to continue bullish to the upside here in the weekly time frame, or we could see price dip more lower into the weekly bullish order block we have here. So I'll be looking at this level, and then in confluence we have to see lower time frame sponsorship zone that aligns to this level, and then look forward to see what would happen in a far lower time frame. If price gives a bullish model, then we continue bullish, or else price would dip more lower into the sponsorship block we can see here in the weekly time frame before the bullish continuation. So what we are going to look now into is the daily time frame here in the dollar index. So what we can see in the daily time frame, I would not really want to go into much details because I don't want this forecast to be so long, because we're going to look at other several pairs. So what we can see is the sweep of the sell side, the bullish movement. I told us to anticipate to see price takes the trend line liquidity we have here. We want to see price trade into the fair value gap, which price traded into the fair value gap. In the 4-hour, we spotted a breakout block that further gave us a reason to go bearish into the order block from the weekly time frame to anticipate bullish continuation into the bearish order block we're seeing now here in the daily time frame. That was the target I told us to aim for first, before we can start framing the possibility to continue bullish to the buy side liquidity we identify from the monthly and weekly time frame. And here again, we have the breaker block level from the monthly time frame, the bearish breaker. And in alignment also, we have now the rejection block level from the weekly time frame. So what we can see here is that price has mitigated the daily bearish order block. So what we could see is the possibility that price may pull back. This is the first level marked from the weekly time frame, a reclaim block, because what we can see here, we had a sell movement, price return, retested, fell, came and went above that, fell again, price return, tested that, fell, and now price is trading above it. So it's from the weekly time frame, you can clearly spot that. So what we can see from the daily time frame is we anticipate this possibility that we may see a bearish reaction to the downside. So this is where we're going to look at for a possible bullish continuation to the upside. So we have to keep our eye here, or then price may dip more lower into the sell movement before the buy movement that took out this high. So since this high has been taken out, so price may return into it and give us what we call the institutional order flow entry drill, or price then may dip more lower before we have the bullish continuation. So since we can see reaction from the daily bearish order block, so we could see bearish movements. So we have this bullish fair value gap here in the daily time frame in alignment to a reclaim level from the weekly time frame, to see the possibility that price may give us bullish model to want to continue bullish, or price may further dip more lower to the downside before we have the possibility of a bullish continuation, or price violate the zone to want to go bearish. But then this is what we're looking forward to see in the dollar index. So we have to keep our eye at this zone and also this zone. So the violation of this zone would mean bearish possibility to the downside. Let's look at the 4-hour time frame here in the dollar index. So what we can see here in the 4-hour time frame is the fact that now we have price reacting from the bearish order block from the daily time frame. So you can see the second level we are looking forward to and the first level from the weekly time frame. So we can see here price, meaning price broke above this bearish order block, and now the bearish order block here is in confluence to this fair value gap, this bullish fair value gap we are seeing here in the 4-hour time frame, which also is in confluence to the daily bullish fair value gap and the weekly reclaim block level. So we could see the possibility that price continues bearish, and price may give us the bullish model from this zone to continue higher to seek the buy side liquidity resting here. So if price doesn't hold from the fair value gap, then we have to look at the sell movement here before this buy movement that took out this high. So price may dip more lower, but then this is what we have to see in lower time frame, 15 minutes, and also looking at the possibility of a model from the 1-hour time frame to want to anticipate the bullish possibility of price to the upside. If price violates this last sell movement before the buy movement, then we could start looking at the possibility of a bearish movement of price to the downside. So let's look at the 1-hour time frame. So here in the 1-hour time frame, basically we have almost the same thing we're seeing from the 4-hour time frame. So here we have a sell movement before the buy movement that took out this high. So we have that as a reference point from the 1-hour time frame. So we have to look at what happens here. If price gives us the possibility to go bearish by taking out this block, so we could see a pullback and then price dips to the downside. So we have to look at what happens at the institutional order flow. If the model doesn't form from the daily fair value gap, then it means we have this place to look at the possibility of the model being formed to continue bullish to the upside. So if this zone doesn't hold price, then we may really see price taking more further bearish movement to the downside. So this is what I have to show us in the dollar index. let's look at the Euro USD pair, guys. This is Euro USD from the monthly time frame. So we can remember vividly we marked the monthly bearish fair value gap zone in which we saw price traded into, and then the month of September gave us this rejection to the downside, respecting also this key level after price took out the buy side liquidity. So we also expected to see bearish possibility to the downside, aiming for the sell side liquidity into this key level before we could start considering the possibility that price may journey more further into the monthly bullish fair value gap. So what you can see in the Euro USD is more of the inverse of what we saw in the dollar index. So clearly now we're seeing that the month of October gave us what? Bearish candle to the downside. We can see that the momentum is bearish to the downside and the sell side liquidity is still resting here unmitigated. And we can't really sport a sponsorship block here to anticipate that this may just turn bullish to the upside. So we're looking forward to the possibility that we may still have further bearish movement to the downside in Euro USD to seek the sell side liquidity. But this is a monthly time frame, so we could see price first give a bullish push to the upside before the possibility of a bearish movement to the downside based on the narrative here now in the monthly time frame. But then let's drop to the weekly time frame to look at what we could see in the weekly time frame here in the Euro USD pair. So here in the weekly time frame, you can clearly see the reaction from the monthly bearish fair value gap zone, bearish rejection taking buy side liquidity. We began to frame bearish possibility to the downside to see how price will keep seeking the sell side liquidity down to the sell side liquidity, and then in extension we are looking forward to the possibility that the market would aim for the sell side liquidity into this key level. So what we can see is when we had this engulfing candle, I told us to anticipate a pullback because price may respect this level again, and then we have the possibility of a bullish pullback before the bearish continuation. Now we can clearly see that price has given us the bearish continuation to the downside. Also last week we looked forward to more bearishness. So what we can see is we had a buy movement here before the sell movement. So price creating a sponsorship block for us here. And then we have that now volume has traded below this key level. So in Euro USD, what we are seeing from the weekly time frame is this possibility that we could see price gives bullish reaction to this level, and then we have the possibility of continuing bearish to the downside. And if price is going to go more higher to the upside, then we're looking at this level, then we can begin to look at the possibility of bearishness to the downside. But I'll be keeping more eye to this particular level to see what happens at this particular key level in the lower time frame. We have to look at sponsorship zones in the lower time frames that align to this level. If that gives us a sell model, then we can just sell from here, or we see price then goes higher into this level. So this is what we can just see from the weekly time frame, except this zone is violated before we can really start looking at the possibility that the market wants to go bullish. But for now, we're still looking at bearish possibility in the Euro USD. So let's look at the daily time frame to look at what we can see from the daily time frame. So here in the daily time frame, we saw how price also, we interpreted that reaction from the monthly zone, and then we saw how price continued bearish. 2 weeks ago, I think, or 3 weeks ago, I told us to anticipate pullback to the bearish order block, and we have bearish reason. So last week we marked the bearish order block here and expect to see how that holds price, and then we have the possibility of further bearish reason to the downside, because I clearly pointed towards that we have sell side liquidity resting here equal lows, and we can see clearly that price gave us the bearish movement, even though we had more of bullish movements Monday, Tuesday into the bearish order block before we had the bearish fall. So we can see this is a level mark from the weekly time frame, and what we can see, it aligns to this mitigation block level. This is the sell movement before the buy movement. This did not push to the upside to take out this high, so we have a mitigation block level here. So what we could see for the coming week is the possibility that price may give us a pullback into this, and then we look forward to a bearish model in lower time frames to want to continue bearish to the downside. We have this sell side liquidity. So what we can see in Euro USD is that the difference is in the dollar index, we can see the dollar reacted at the bearish order block from the daily time frame. But clearly here in Euro USD, we can't find a bullish block, aside the fact that price now traded to the downside, taking sell side, and this sell side now into this bullish fair value gap. So this may be what could give us a possibility to see price trades higher back to mitigate this level before we can look forward to bearish continuation. So we still have bearish possibility in Euro USD, just the way we are looking forward to bullish possibility in the dollar index. Except proving otherwise, then we can begin to look forward to bullish reason in Euro USD. But for now, we have to see what happens here. If this levels gets violated, then we could now begin to frame bullish reason. But for now, we're still looking forward to see how price continues to the downside. Let's check the 4-hour time frame here in the Euro USD. So what we can see in the 4-hour time frame, in confluence to the weekly level we marked from the weekly time frame, and now this is the daily level. What you can see here is we have a fair value gap here in the 4-hour time frame. So we have bullish movement of price. Price fell to the downside here, a pullback into the bearish order block. Price respected that and then gave bearish impulse to the downside, breaking this low, further going to the downside, taking out this sell side liquidity, equal lows. So what we can see here, we could see the possibility of now price pushing higher to the outside to seek this liquidity into the fair value gap. And here we have buying movement before this sell impulse to the downside. So from the 4-hour time frame, if in the 15 minutes you can see bullish structure to the upside, you want to take that, aiming for price to take out this liquidity into this 4-hour fair value gap, which is in confluence to the daily level, and you can see weekly level is also here. And then we could see the possibility of price giving us a sell model to want to continue bearish to the downside here in the Euro USD. So this is what I have to show us in the Euro USD. So before we head to the chart to look at the GBPUSD pair, I would like you guys to know about the Smart Money Concept Trading Bible. It is actually a material that has been well structured to guide you in understanding how the market operates. And inside this material, you're going to discover how to think and learn how the institutional players engineer liquidity and trap we the retail traders. Because we retail traders are trying to understand the frameworks of the institutions and then use that knowledge to trade. So the Smart Money Concept Trading Bible is designed to give you that understanding and to help you trade your trading decisions based on the frameworks. So what you're actually going to learn from this material is the core principles of the smart money concept, which is basically the SMC methods. So, and you are going to learn how to identify liquidity zones, order blocks, market structure shift, change in state of delivery. You're going to actually have an in-depth understanding of the valid institutional market structure, valid institutional change in state of delivery, how to mark out your liquidity zones, and basically where you target for your take profits, which are also liquidity levels. So you're also going to have an understanding of the difference between the retail traps and the institutional footprints. So what you're also going to gain from the material are actually proven frameworks, schematics, and real-time examples for entry confirmation and also risk management. So you can do well to check the description section to this video or check the comment section so that you can go have your own copy of this particular material, guys. So let's head to the chart so that we can look at the GBPUSD. So here in GBPUSD from the monthly time frame, we saw GBP reacted from a monthly key level and then gave a bearish movement of price to the downside. We anticipated to see how price was going to respect the engulfing candle to further sponsor bearish movement to the downside because we identified relative equal lows, which is above the monthly bullish fair value gap here. So what we can see in GBPUSD is that GBPUSD traded to the drawn liquidity to the downside here. We identify how this monthly candle took out this previous monthly candle high point, which is the month of August. And then we had the fulfillment of the month of September to the downside. So we anticipated to see how price was going to trade back into this key level since we have a rejection block here. And then we anticipate further bearishness because we identify the drawn liquidity, which is the equal lows resting here, and then the monthly bullish fair value gap. So we can see the fulfillment of that movement. So what we can see is Euro USD did not necessarily take out the long-term sell side liquidity. Neither did the dollar index took out the buy side liquidity. But yeah, GBP had more trading volume to the downside, seeking the sell side liquidity here into the monthly bullish fair value gap. So in the GBPUSD, based on what we are seeing here, we could see price gives us a reaction bullish and then we continue bearish because we are seeing strong bearish volume. So there's the possibility that price may trade and violate this monthly bullish fair value gap based on what we're seeing from the monthly time frame here. But then let's look at the weekly time frame here in GBP USD. So what we can see in the weekly time frame in GBP USD from the weekly time frame here is the pullback into this key level, rejection to the downside. You know, I told us to anticipate a pullback into this engulfing candle, and then we continue bearish first to this key level before we determine and frame the possibility that price was going to trade more lower. And price gave us that possibility to anticipate more bearishness to the downside, to take out the sell side liquidity into the monthly bullish fair value gap zone. Based on the model, candle models, and understanding the psychology to the candle formations, we saw how price was giving us engulfing candles bearish. When price printed this other engulfing, I told us to anticipate a pullback bullish to continue bearish. Now, last week we saw another engulfing. I told us to anticipate a pullback bullish to anticipate bearishness because now price is aiming for the sell side. So clearly what we can see here is that price now has traded to the downside into the monthly bullish fair value gap. Within the monthly bullish fair value gap, we have this key level, this open close price unmitigated. So we could see price possibly continue bearish to react from here to give us a bullish reason before we have the bearish continuation to the downside. So what we're going to look at, since price has now violated this key level, it means if we're going to see our bearish continuation, we could see price give us a bullish pullback for us to have the bearish continuation back to the downside. So it means if we can see price holds from this level, in extension the open close price of this candle week, then we can begin to frame bearish reason to the downside. And one thing we must understand is price may not necessarily have to dip into this level. So that is why when you mark higher time frame levels, you also have to check the roadblocks in lower time frames. So we're going to look at the lower time frame to look at if price would necessarily have to pull back to the upside to this level before we have the possibility of a bearish reason, or we could see price pulls into the 50% of this candle volume and then we have the bearish continuation. So let's go to the daily time frame here in the GBP USD pair. So what we can see in the daily time frame is our equal lows have been taken. So while we are having bullish reaction here because price has traded into the monthly bullish fair value gap zone, in confluence is this daily key level because we have price traded to the downside here seeking this liquidity, and then price traded bullish violating this high. So what we can see, this return did not mitigate this high. So now price have returned mitigating this high, which is in confluence to the monthly bullish fair value gap. And now we can see bullish rejection to the upside from the daily time frame. So we can begin to look at the possibility that price may continue higher to seek this high. And now we have this fair value gap bearish here in the daily time frame. This is the level mark from the weekly, and slightly above that we have a fair value gap and a buy movement before a sell movement. So from the daily time frame, for a bearish possibility in the GBP USD, we could see price takes a bullish reason to the upside. So we have to look at what happens at this fair value gap, because this fair value gap is in confluence to this rejection block that was violated, because here we have the sell movement before this buy impulsive movement. So we could see price gives us a sell model here to want to continue bearish to the downside back into this fair value gap. That is if price doesn't just continue bearish to the downside. But then what we are seeing here is the possibility that we could have bullish reason to the drawn liquidity to the upside, which is this bearish fair value gap. So we have to look at what happens here in lower time frame, 1 hour 15 minutes time frame. If price gives us the sell model, then we can anticipate to sell from this fair value gap and then continue bearish to the downside. But then if price decides to go way more higher, then price may violate this fair value gap, and we could see price gives us more reason to go bullish to the upside, and then we can begin to look at the possibility of price framing the sell model for us to have bearish movement to the downside. So this is what I have to show us in GBPUSD here in the daily time frame. We're going to look at the 4-hour time frame in GBPUSD. So let's get to the 4-hour time frame. So what we can see in the 4-hour time frame is this: a break of this, price took out buy side liquidity, return mitigation, bearish reason, and now price has broken through this low points. So here we have the daily bearish fair value gap, which is the possible target we may see price trade into. And then if the model occurs here, then we sell, or price may go way higher and then gives us the model. So we can see here price traded to the level, daily level, which is within the monthly bullish fair value gap zone. So GBPUSD is giving us bullish movement to the upside than the EURUSD, and we have a valid reason, is that price is reacting at the daily level within the monthly bullish fair value gap. So for a bullish continuation, I would look at price respecting this level, and then in the lower time frame, 15 minutes, we could look at the possibility of a buy model to see price trades more higher into this fair value gap. So this is where I'll be waiting to see what happens here. If price gives us a sell reason, then we sell from this fair value gap to continue bearish to the downside, or price may trade higher into the weekly level and then gives us the framework for a bearish possibility to the downside. So this is my expectation in GBPUSD. So we'll be looking forward to see what happens when price gets here. If price gives the bearish model, then we go bearish further again to the downside. If that doesn't hold from the daily bearish fair value gap we have here. So this is what I have to show us in GBPUSD, guys. So let's check out the next pair for the coming week. Here in US oil, what we can see from the monthly time frame is we are seeing bearish narrative, pullback, seeking buy side, fell to the downside, pullback here, seek buy side, bearish impulse, taking out the low, a pullback, and then bearish delivery. So we anticipated continuous bearishness, so that price will seek the sell side. But anyway, price traded to the downside, did not seek the sell side, and price closed to the upside. So we can see price is respecting this engulfing candle. So what we may see is that price may trade higher to react from this unmitigated candle week, and then we could see the possibility of bearish continuation to the downside. So let's look at the weekly time frame, because the storyline here is not really so clear based on this candle delivery. But then all we can see is that we are bearish. So we want to stay with the bearish narrative before we tend to want to change the narrative to a bullish narrative, because we can see that price is respecting this bearish engulfing candle. So price respected that at the mitigation and fell. So we could just see price may go bullish to react at the unmitigated week here, open close price, and then we have the possibility of our bearish continuation where price seeks last month's high before we have bearish possibility to the downside. Let's look at the weekly time frame here in the US oil. So what we can see in the weekly time frame, clearly we see how price traded to the upside, mitigation from this rejection block, bearish reason after price seek this buy side. So you can see clearly we're looking forward to see how price was going to seek the sell side liquidity, because we can see how price return respecting again this bearish order block that seek this high points before continuing bearish to the downside. So we can see last 2 weeks gave us this bullish reason to the upside, and I told us that we can still anticipate bearish possibility. That was last week. So last week gave the bearish movement, but the volume is not high, and we can see that price did not really move strongly to the downside, neither to the upside. But then we can see we had more movement to the downside than to the upside. So this bearish block is still being respected. So we could still see price just continues bearish to the downside here in the US oil. It is whatsoever that violates this that may begin to give us a bullish framework to the upside, but we are still bearish. Let's look at the daily time frame. So what we can see in the daily time frame is this: price here seeked buy side, bearish fall. We saw how price returned to this breaker, rejection. Last week I told us to anticipate to just see price continues bearish from this. That was what I showed us, because we looked at that from the 4-hour time frame. I think we saw a reason to anticipate that could just give us the bearish fall to the downside, and price may not necessarily seek this buy side. So thus far, we can see the delivery went bearish to the downside, but volume is not really strong and price did not dip into this fair value gap. What we can see is that Tuesday gave us a bearish momentum to the downside. So we have to see how price holds at this level here. Here we have the buy candle that took out buy side, closed bearish to the downside. So I'll be looking forward to seeing 15-minute time frame how this level holds price. If this gives us the sell model, I'll be selling to the downside to this fair value gap, and then that would determine how we now continue bearish to the downside. So this is what I have to show us in the US oil here in the daily time frame. Except price decides to violate this level to seek the buy side liquidity here, then we have this fair value gap resting here for us to frame the bearish framework to the downside when that is presented to us. But I'll be looking forward to this in US oil. Let's check the 4-hour time frame. So what we can see in the 4-hour time frame here in US oil, last week, I saw how price was reacting from this unmitigated week, because now price sponsored bearish movements, taking out this low, and we saw how price traded seeking already a trend line liquidity here. Hence why it told us that we could just see price sell from the mitigation we saw last week at this unmitigated candle wick, without price necessarily trading bullish to seek the buy side liquidity. So I told us to anticipate how price was going to violate this, a pullback, and then we continue bearish, looking forward to see how price was going to trade to this level in confluence to the fair value gap. So we can see price traded bearish. Anyway, price did not dip into the fair value gap. So here we have a demand block, price created a supply. Now we can see more of a flip zone. So I'll be looking forward to see how the flip zone holds price and see what price would present in lower time frame on bearish model to just want to trade bearish at this level and see how that may get violated to now give us a more bearish framework to the downside. So why do I want to trade from this level? Because this may give us a bullish reaction, and we wouldn't know if the bullish reaction may now just continue bullish. So why I trade from zone to zone. But then I'll be looking to see how price presents a bearish framework from this zone here. So whatsoever violates that zone, then it means price wants to aim for the buy side into the fair value gap resting here. So this is what I have to show us in the US oil. Let's head to the next pair, guys. This is yen basket, and what we can see in the yen basket is that the yen basket is giving us a bearish order flow. And we can see that price fell, a pullback, price again fell, pullback. So we're expecting to see how price is going to give us the possibility to continue bearish. And what we can see from the monthly time frame is that last month closed with a bearish momentum to the downside. So if we're expecting more bearish momentum, then we still have to wait to see how price trades more bearish into this engulfing candle, this bullish engulfing candle, because we are holding to the bearish order flow. We can see how price traded here to the upside, return, price, return, pull back to the upside again, and then fell. So now we have a buy movement before a sell movement. So for our bearish continuation is either we see price gives us a pullback to the upside. I don't really think price may necessarily have to pull back to this level, but then would have that level in view. So it is either we see price pull back to the 50% of this volume, and then we continue bearish to the downside, or price pulls back deeply into this before we have the bearish continuation. So it is possible that we may see price trade to react here to give a bullish reason before we may possibly close bearish for the months. But then this is what I'll be looking for. If price is giving us a bullish return, maybe the mean threshold of the volume of the bearish candle here to continue bearish. So we are still bearish in the yen basket. Let's look at the weekly time frame in yen baskets. So here in the weekly time frame, what we can see is price seek the buy side, continued this bearish movement, but then price traded higher, and now we are seeing bearish framework to the downside. So price here gave us this buy movement before the sell movement, price return mitigation, continued price return to this open close price here, mitigation in confluence the fair value gap here, and now price fell further to the downside. So we can see price pull back into this bearish sponsorship block and a bearish fall. An engulfing candle was created, price pull back, and then price continued bearish. So, last week we had price. I expected to see how price was still going to continue bearish to mitigate where we have this buy candle before the sell movement to the downside. And you can see clearly price traded to that. So from the monthly time frame, this is a level we are looking at the possibility of price trading further into. So we are holding on to bearish possibility in the yen basket. It means if we have bullish reaction, so price may trade bullish into this candle week, or price may take out the last week high point and then we continue bearish to the downside here in the yen basket. So this is what I have to show us in yen basket from the weekly time frame. Let's look at the daily time frame so that we can see more sponsorship zones. So here in the daily time frame in the yen basket, last week I told us to anticipate to see bearish reaction from the bearish fair value gap in confluence to the sell movement before the buy movement that traded into this fair value gap. And now we can see clearly price return into that, respected that, and continue bearish to the downside. So here we have a buy movement before a sell movement that took out this low and a bearish fair value gap. So we'll be looking forward to see what happens here. If price gives us a bearish model here, then we just want to sell to the downside to continue bearish into this level we mark from the monthly zone. So what we can see is if price possibly then violates this level, then we may begin to see price aim higher for this buy side liquidity. But then we have to keep our eye here to see what happens in the lower time frame. A bearish framework is created here or model has been created here, then we can just go bearish to the downside. So this is what I have to show us from the daily time frame in the yen basket. Let's look at the 4-hour time frame. So here in the 4-hour time frame, reaction at the daily bearish fair value gap in confluence to the daily level we marked, the bearish movement of price to the downside. So here we have an unmitigated week. This is the daily bearish fair value gap. So we're looking forward to this. We'll see how price reacts. So I think price may gives us more push to the upside into that level, and then we look forward to the sell model to then want to trade bearish to the downside. So whatsoever violates this unmitigated week, then we could start seeing price aiming for buy side liquidity. So this is what I have. This is the framework for the coming week in the yen basket. This unmitigated candle week in confluence, slightly below it is this daily bearish fair value gap. So we have to wait to see the sell model created in lower time frame, the 1 hour, the 15 minutes time frame. And then we begin to look at the possibility of continuing bearish in the yen basket, except proven otherwise. So let's look at the next pair, guys. Yen GBPJPY, all can see we had the sell move before the buy movement, the bullish order block. Price mitigated that multiple times before we had bullish push, a change in state of delivery. Price mitigated that bullish continuation. So from the monthly time frame here in GBPJPY, what we're looking forward to see is the possibility of how price gives a pullback to this level to give us a bullish continuation to the upside, because what we have is this reaction took place from the bearish fair value gap. So we have the bearish order block unmitigated here in the monthly time frame in GBPJPY. So reaction would be the possibility to see a pullback to this level before we have the possibility of bullish continuation. So this is the narrative from the monthly time frame. Let's look at the weekly time frame here in GBPJPY. So here in the weekly time frame, what we can see in confluence to that level, we have a bullish order block. Price traded to the upside, failed to continue higher to take this high. Price went bearish into this fair value gap. So we still have this block to consider, to hold on to see how price may react from it, because we can see this 6 sell side liquidity. So for a bullish continuation, if this decides to continue bearish and doesn't necessarily just go bullish, we're looking forward to see how price will give us a buy model from this sponsorship zone to trade bullish to the upside. Until this block is violated, we don't have a reason to hold on to a strong bearish reason until this block is violated. So let's check the daily time frame to look at the narrative in the daily time frame. So here in the daily time frame, what we can see is the monthly level, which also saw from the weekly time frame. And clearly we can see a fair value gap here. Price fell into the fair value gap, went higher, price again returned. So we have this breaker. The volume have not been mitigated. So we could see price trade lower to that breaker. And if price dips more lower, they'll be looking at this level. So want to see this level holds price to give us bullish possibility. So here price respected this bearish engulfing candle. So if price is going to trade lower, then we may see how price gives us a model here to want to go bearish. Then we have to trade bearish to the breaker level, and in extension this level we have here, and look forward to the possibility that that level could give us the buy model to push price higher. Whatsoever violates this zone makes us then to start looking at bearish consideration. So this is what I have to show us from the daily time frame here in GBPJPY. Let's check the 4-hour time frame. So in the 4-hour time frame, where we have the 4-hour breaker, we can see here a buy movement before a sell movement that took out this liquidity, took out this trend line liquidity. You can see strong impulse that broke this high. So we have the buy movement before the sell movement, and now we have bullish impulse breaking this high. So what we can see is price respected this bearish order block and then went bearish to the downside. So what we may see is the possibility that price may respect this breaker. So we would want to keep an eye here to see if that gives us a sell reason, meaning price opening and taking this buy side. If that gives us a sell reason, then we'd want to sell to the breaker and then wait to see what happens here. If price doesn't print the bullish model here, then we know we have the next level here to consider for the possibility that price will print the bullish model for us then to have GBPJPY continue bullish to the upside. So this is what I have to show us in GBPJPY, guys. Let's move on to the next pair. Here in USDJPY from the monthly time frame, what we can see is we're still expecting bullish possibility. Price is bullish. The market here is bullish. The narrative price pulled back, went bullish, took out this high, fell to the downside, swept sell side. Expectation was to see bullish reason to take out this high, but then price respected the bearish block and then gave us a bearish movement, but then failed to continue bearish to take out this low. So it means price is trading within this low and this high. So that is the range. And what we can see is the month of October gave us a bullish impulse to the upside. Price traded into this fair value gap. So we have this bullish reclaim block. So we may see price gives us a pullback to continue bullish to the upside. That is a narrative from the monthly time frame here. If this price dips more lower, then it means to the sell movement we have here before the buy movement to the upside. But then I'll be looking more to the reclaim block level here to see what happens at the reclaim block. If price gives us a bullish model, then we want to continue bullish to the upside, which would enable this fair value gap to serve as an inversion fair value gap, because the month of October, the volume of the bullishness to the upside strongly closed bullish within the fair value gap. So let's look at the weekly time frame here in USDJPY. What we can see from the weekly time frame is the level mark from the monthly. So you can clearly see that this is the range, this high and this low, sweep of sell side. Expectation was to see bullish reason to take the high, but then price traded within this range, this high and this low, and we began to see the bullish narrative to the upside, and we expected more bullish reason to the upside, in which we can see the fulfillment of that. So to continue bullish, we want to see how price reacts at this level and at this unmitigated week here in the weekly time frame to give us a buy model to see the possibility of continuing bullish to the upside. So what we can see in the USDJPY is holding on to a more bullish possibility than bearish. So I'm holding on to bullish possibility. So we could see price dip lower to the downside into this weekly level, which we marked from the monthly time frame. If price dips more lower, then it means we have the sell candle here before this bullish movement. Then we can begin to anticipate a model to be formed, which is bullish to go higher. Let's check the daily time frame. So here in the daily time frame, what we can see is the weekly level, and in the daily time frame, we have the sell movement before the buy movement that violated the supply block, because price gave us an engulfing candle here. Price returned, mitigated, fell. Price came reacting at the high of it and then gave a bearish movement. So more of a flip zone, a supply creating a demand. So if price doesn't dip way lower, so it means we'll be looking forward to this to see if price is going to give us a buy model to continue bullish. And then if price dips lower, meaning price would want to seek the sell side. So the next zone to look out for is the possibility to see a reaction from this fair value gap to create the buy model to want to continue bullish. So whatsoever violates this fair value gap with strong volume to the downside, then we may begin to start looking at the possibility of bearish continuation to the downside. So this is what I have to show us in the USDJPY from the daily time frame. Let's go to the 4-hour time frame. So what we can see here in the 4-hour time frame is the narrative clearly we just saw from the daily. So we can see from the 4-hour, last week I told us to see how price was going to give us a bullish push from this base level because we had a rally, a base, a rally, and then there was a daily bullish fair value gap here. So I told us if price doesn't buy from there, then we have to look at this consolidated movement here to frame a bullish reason. So what we can see is that price came into that and then the bullish reason. So it's clear to us that we have a pullback, a bullish impulse that strongly then validated the break of this high. So what we may see is we have a fair value gap here. So we have this level and in extension then this other level resting here. So this is what we'll be looking forward to see in USDJPY except proven otherwise. So let's move to the next pair, guys. So before we look at the next pair, for those of you struggling to download and make payments for the Smart Money Concept Trading Bible, you're facing some technical issues, you can do well to join the free Telegram community so that you can be able to see the link where you can send a DM to us and then we can be able to address that so that you can be able to download the Smart Money Concept Trading Bible for yourself. So this is gold and this is the monthly time frame. So what we can see is that gold has been bullish. Gold created a new all-time high and now we can see this bearish rejection to the downside. So it means if this is going to be bearish, then we're looking forward to see gold trades into this bullish fair value gap here in the monthly time frame. But then we're seeing that gold has just been giving us bullish momentum, though yeah, we can see a rejection. So the candle closed with a bearish rejection, though we have a bullish colored candle, guys. So let's look at the weekly time frame. So here in the weekly time frame, if you guys have been following, when we started seeing the narrative of this bearishness, I told us we could see price further trade into this weekly bullish fair value gap. And now price have traded to the downside, more into it, and traded back to the upside, respecting the consequence encroachments. So it means that now price may just continue bullish. But then looking at the fact that there was this bearish rejection printed last month, which we saw from the monthly time frame, we could see gold just decide to want to dip more lower from the fact that it has created a new all-time high. So the lower time frame would help us to understand what then we should really be looking forward to, how we can trade bullish to a zone that could give a bearish possibility. So let's look at now the daily time frame. So here in the daily time frame, what we can see is the fact that price just gave a little reaction from the sell movement here before this buy movement, just a rejection to the upside, but failed to go bullish, and then price fell to the downside, fully mitigating the weekly bullish fair value gap. And what can we now see here is that Thursday gave us bullishness to the upside, but then Friday failed to continue bullish, Friday respecting this bearish fair value gap. So the overall directional bias is that we are bullish. So that doesn't mean that I will just jump into a bullish movement and then just continue bullish all the way to the upside. So even the lower time frame, I find a reason to want to be bullish. I'll be bullish to this level because price may come to this level and gives us bearish fall to the downside. Here we have this buying movement before the fall that violated this block. So if price then traded and volume strongly closed above that, then we may be looking for a pullback to then trade bullish, and then I will not be extremely bullish, but then to this bearish block, because from this bearish block we could see price fall to the downside. But now look at what is happening in the markets. We can see that here we have a bearish fair value gap. So there is the tendency that we may have bearish continuation to the downside because this fair value gap may hold price. But then what will happen is if then we see volume strongly close above this fair value gap, then there is the high probability that then this level would not hold and price would violate it to the upside. So let's check the 4-hour time frame, guys. Here in the 4-hour time frame, in confluence to the bearish fair value gap we saw in the daily time frame is an inversion fair value gap here from the 4-hour time frame, which is within the daily bullish fair value gap and now aligns to the daily bearish fair value gap. So we had this sell movement before the buy movement. Price came, reacted, went bullish, but then failed to continue bullish to the bearish block from the daily to give us the possibility that we may have that fall. So price just fell. Now you can see that price is reacting at the inversion. Price came, mitigation, which is a daily bearish fair value gap. Also, price fell, price again return, bearish rejection. So what we could see is the possibility that price may come to this level, react from this level, and continue bearish to the downside. So we have to look at what happens at this level. So it is the violation of that level. If we have price gives us bullish volume, violating that, then we can look for a pullback to trade to this level first. So when we trade to that level first, we can now determine to see if there is going to be a bearish possibility here, or price would just continue bullish to the daily bearish block here. So this is what I have to show us in gold. So this is clearly what I'll be observing to see. If this delivery happens, then we go bullish. If this happens in lower time frame, 15-minute, 5-minute price, given a bearish model from this level, then we go bearish. So let's check the 1 hour time frame if we could possibly see more reasons from sponsorship blocks. Let's go to the 1 hour time frame. So here in the 1 hour time frame, what we can see is the inversion fair value gap, which is a daily bearish. You can see here we had this buy movement before the sell movement. Price seek this liquidity, fell to the downside, did not continue bearish, went to the upside, seek this again, now price fell. So what can you see? Price returned to a bullish block, now reacted, giving this bullish movements. So what we can see is the inversion fair value gap, which is a daily bearish fair value gap also. Now we can see price giving us a bearish zone here. So we're going to observe to see what happens here. So it means I'll be looking forward to see how price gives us a possibility of printing a bearish model to continue then bearish to the downside. So it means if this block holds, then we may just see bearish reason. But now price is reacting from a bullish block. And then it means that if this then traded higher and violate this level, that sponsorship block, then we can begin to look at bullish possibility to the upside. So this is what I have to show us in the gold pair. So cheers. So the next video come your way. Have a profitable trading week, guys.